Isn't it fascinating? The world's greatest investor is giving out his gold mine of lessons for free, and all you need is an action plan to benefit from it. I think the conversation you're about to watch with Warren Buffett puts one of those lessons as vividly as possible, which is why I think this is the perfect jumping board for me to tell you more about it. Obviously, this is not financial advice, but subscribe to the channel for more discussions like this. Let's dive into it.
You made your first investment when you were 11 years old?
In 1942, 80 years ago, I took $114.75, every penny I'd saved, and I bought 3 shares of City Service Preferred. And City Service was a pretty well-known name now and then. In fact, in 1920, City Service, I think, was the 4th largest company in the United States in terms of number of shareholders.
But you felt the thrill of it then.
I've been reading about it and following it. The whole market. I really had read every book in the Yale Public Library that was on the stock market.
By 11?
By 11, I'll guarantee you. And some of them twice. I started out reading the ones in my dad's office, and I just loved to read. I mean, I read other things too, but I knew more when I was 11 than I know now. I mean, in terms of the actual mechanics of the stock. I mean, I don't know what happens when I put an order in now. I mean, it gets in the machinery of the way orders are executed now. I would know if I sat and worked in a trading room for a day or two, but I don't really know the mechanics as well of what happens when an order is processed today as I did when I was 11.
I think in some ways Warren Buffett was born at a very important turn in history as it regards the attitudes towards investing. Putting your money in a publicly traded stock market as a means to compound wealth had started to become more popular in the US in the late 19th century, and especially after the turn of the 20th century. But for basically 5 decades, investing was treated more like a get-rich-quick scheme, with people making fancy charts and trying to predict what a graph was going to do next. It was driven by speculation, market hysteria, and short-sightedness toward what a stock even is. That attitude's partly what contributed to events like the Panic of 1907 and stock market crash of 1927, and even to a degree, the Great Depression. But if you look at it fundamentally, this kind of trading and investing pitted people against each other in the stock market to try and pass on stocks for profit, rather than truly investing in the country's businesses to make them successful for collective benefit. That is what the stock market has always meant to be, but it was too often treated like a game of day trading for quick profit by using other investors as exit liquidity. But the rise of a mind like Benjamin Graham and then Warren Buffett, who he mentored, was also the rise of a new attitude to investments, and I think it's safe to say that the stock market and world of investing has developed a lot more guardrails and regulations since then, so people don't just use it as a means to day trade and try to get rich quick. That philosophy is what infuses Warren Buffett's ideas and has led to a change in people's idea of what investing even is.
What is it you enjoyed the most about it? Because you don't pick stocks, you pick companies.
Yeah, but when I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and Miki. I think that was the classic then. I mean, hundreds and hundreds of pages. And I read that whole thing over and over again. I read Garfield, Drew, I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. And I rejiggered my mind when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded.
And that's exactly the change brought in by the work of Benjamin Graham with The Intelligent Investor, relating the graphs and numbers in the stock market to the very real businesses behind them. It grounded them in something that was more concrete and easier to understand, because all you need to have was trust in the company or business's fundamentals to free yourself from the stress of watching charts and numbers change on a daily basis. And that's where things like value investing and margin of loss come from in Warren's investing philosophy. I think if you look at it, both Ben Graham and Warren Buffett restored the stock market to what it was always meant to be, removing a lot of the noise that surrounded it. The whole point of a stock market is to collectivize the risk and reward the business ventures to the broader public. It's a derivation of the idea of a joint stock company where shareholders own parts of a single business and are invested in the loss or profit that it generates. If you trace it back to history, this collectivization of risk and reward comes from sailors in the 13th century that used to sail the turbulent seas to find unknown islands and treasures. But obviously that was an extremely risky adventure with no guarantee that any land or resource would be found, or they would just lose their life in the journey. Sailors then collectivized themselves and decided to sail many ships together to help each other in distress to increase their chances of success. They owned small portions of the entire enterprise and were entitled to proportionate resources or land that were found. That's what evolved into a modern company over time, and then a stock market.
I've asked people about your genius, whatever we describe it.
No, I'm a bright guy who's terribly interested in what he does. So I've spent a lifetime doing it. I've surrounded myself with people that bring out the best in me. And you don't need to be a genius in what I do. That's the good thing about it. If I went into physics or a whole lot of other subjects, I'd be an also-ran. But I am in a game that you don't need. You probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
What do you need?
You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
Pardon me?
And what do you think about?
I think about what the company's going to be worth 10 or 20 years from now.
I think the difference here lies in those two approaches to the stock market that I mentioned earlier. Someone that thinks you need to be a genius to make money in the stock market is probably only thinking of the short-term, day trading kind of investment, when in fact long-term business-driven investing requires emotional intelligence, delayed gratification, and a degree of patience. You can't let graphs and bars on a screen control your emotions or investing moves because you'll only make the wrong choices every time. As Ben Graham puts it, quote, "The intelligent investor is a realist who buys from pessimists and sells to optimists." Being a realist in this sense is just understanding that the business environment of the nation at large is going to become better over time. Companies will rise and make money over the decades, and you need to make yourself part of that rising tide.
And I've never, since that day, in March 11th, 1942, I have never had less than 80% of my money in American business. You can call them stocks.
Or equities.
But I see them as American business. I've owned a piece of American business for at least 80% at all times. And, I don't want to own anything else. I want to own a home and things my family wants and all that. But owning 5 homes doesn't mean anything to me because I'm going to be happy in one home, and there's a certain amount of things that go wrong with everything. And if I got 2 homes, I know I've got more problems and I don't have more happiness.
That's an interesting window into his thought, given how he says American business rather than the stock market. The market is just reflective of those businesses, and it's that seemingly simple understanding that has made Warren Buffett the greatest investor in the world today. That should tell you that there's really no secrets to the game of stock market investing, because the real ingredient to success is knowledge that's put into action coupled with patience. On a long enough timescale, the formula has proven to be successful, and let me know in the comments how you view it, because it's certainly intriguing to see how close a lot of people are making it big in the stock market.